Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Thursday the 30th of the 9th 2021. The time is 0445, quarter to 5 in the morning GMT. Asian session coming to a close, European session firing up, our lunchtime North American session. Right, yesterday then, Wednesday the 29th, we had a positive opposed driver in the dollar, plus 252. Front and back door flows mainly coming out the pound at minus 176, out the euro at minus 129, and the yen was a positive rocket, plus 53. Activity plus or minus 305. Intra-week then becoming more relevant. This is from Monday the 27th of to about 15 minutes ago. We've got a positive unopposed driver in the dollar. No backdoor flows. The opposing negative flows mainly coming out the pound at minus 349, out the euro at minus 64, and the yen was the negative rocket, minus 44. Activity plus or minus 457. So yesterday then we had this strong dollar driving in an opposed manner, and the main flows were coming out the pound and the euro, and the yen was relatively static. And over the week we've had a strong dollar driving to the exclusion of all else, with the pound taking the brunt of the negative flows. Right, intraday then, this is the Asian session to about 15 minutes ago. Positive unopposed driver in the pound at plus 46 this time. No backdoor flows. The opposing negative flows mainly coming out the dollar at minus 44, and we've got a joint rock and mover, negative mover in the euro and the yen at minus 1, minus 1. So the Asian session is showing a reversal. You can see that we've got pound strength driving now in the Asian session, and we've got dollar weakness, and the euro and the yen are fairly static in the middle. Right, stop it there and write up the flows. Right, we've written up the flows then. So the euro is weak except against the dollar, which is weaker. The yen is weak except against the dollar and the euro. The pound is strong except against the AUD and the NZD. The Swiss is weak except against the yen, the dollar and the euro. The CAD is strong except against the pound, the AUD and the NZD. The AUD is strong across the board, the NZD is strong except against the AUD, and the dollar is weak across the board. So what have we got then? We've got dollar weakness across the board. As we said earlier, we've got a reverse in yesterday's and the weekly flows, and we've got AUD strength across the board. And take your pick in the middle. You've got AUD and NZD strength. So you've got and you've got Swiss weakness predominantly. So it's looking sort of a bit risk on anyway. So let's have a look what's been knocking it about, or what will. Thursday then the 30th today, we've had China non-manufacturing PMIs which came in positive. So that's non-manufacturing, so that's services and what have you. Manufacturing PMIs have come in negative, so and that's where China's been focusing, influencing raw material input prices. So it's no surprise they've managed to manipulate the manufacturing PMIs to negative. So something to bear in mind. We've got GBP GDP today. We've got Bank of Japan speech, Kuroda. We've got German CPI, so inflation data, and we've got US GDP. So we've got some significant tier 1 events rolling in throughout the day. So we'll stop it there and write up the asset classes. Right, we've written up the asset classes then. So US dollar index, basically massive pump up in the dollar, and it's just come off slightly. It's just sub the highs. In gold won't really like a strong dollar, and it's now 0.28 from the floor, just perked up from just a little bit off this dollar fall. Oil's been ramped right up. It's hit a double top and it's come back a little bit. It's 0.18 from the high, so it's 18%, 20% off the modeled high. Wall Street, S&P, Tech, they've all got this same look. They've been going up. They had this pump down. They went back up. They came back down, and now they're just starting to come back up again. So we've got 0.48 off the floor for the Wall Street, 0.45 off the floor for the S&P, and 0.36 off the floor for the tech. So they're all below half marks. The equities haven't fully recovered, which gives them plenty of elbow room to start coming up. And bear in mind, we've got this sort of this risk on sort of look to the day, so bear that in mind. US 10-year and the bunds, this is the prices. The prices were thumped right down on both the 10-year and the bund, which means yields were strong, and they've just come back a little bit, so it's 0.20, 20% on both off the floor, and that sort of ties in with the slight drop in the dollar index, etc. So and copper's been got thumped down. It's now 0.42 from the floor, so it's not quite half marks, but it's recovered a bit. And US steel has been sort of hanging around the floor, 0.14 from the floor. They've just had this debt ceiling resolution to a degree on the funding of these $1 trillion bills in America, so you could see US steel start to perk up today. Right, so let's get rid of that and do the final analysis. Now, one of the things about normally when you run into sort of lots of meetings yesterday, and the Fed particularly, is that the dollar index stays around the sort of the daily open, and that's what we suggested. However, yesterday the dollar index was pumped, and obviously the euro and the pound got the negative flows, and you had this situation where the euro on a daily was starting to knock on the doors of significant support, and you had ongoing meetings coming on, and we decided to when the euro got down to the floors, it was 1.16 and change. We were just like buying the euro dollar for all it was worth, and you could buy that in relative safety, and we swung some quite large positions and ended up roughly only about 50 units up, because it didn't really come off the floor in towards the end of the European session, but it was worth a go, and you could buy the euro dollar in relative safety when you had these it was butting up against this strong support, and the market was running out of steam and time to do anything about it. Right, so where are we today then? So you've got this, so we've got the majors, the euro, the yen and the pound. We think equities are looking like they want to recover, so that's going to put negative pressure on the yen. So you've got flows out of the yen. The dollar's been really pumped, remember, you're starting to think about coming off. Likewise, and the euro has got this inverse look about it, as has the pound. So and what data have we got out today? We've got GDP, so that's we've got GDP there, and we've got German CPI, so we've got German CPI, and we've got US GDP. So it's all sort of set up for reversals in the flows. So watch out for dollar weakness, euro strength, yen weakness, and pound strength. So that's what we anticipate happening today. And the commodity currencies, the CAD, the AUD, and the NZD, they should be on the up, and the Swiss should be on the down. Standard risk on transmissions. Equities up. Gold could well come up because of the dollar coming off, and oil may well dirge around. It's near the highs. So that's what we think is going to happen. Hope that was useful for you. If you're going to play, you know, the main drivers in the past have been the pound and the dollar. So just watch out for that. And the yen and the euro tend to take a back seat. So, but that may not be the case. But just watch out for that. Anyway, thanks for watching. See you tomorrow for the daily briefing. Goodbye.